Good morning, welcome to the market overview for Thursday the 12th of June 2014. And starting off with yesterday's chart, we can see that according to the Office for National Statistics, the economy is well underway with its recovery, and I obviously am saying that with tongue-in-cheek. Unemployment rate dropped once more, but no sign of interest rates going up as promised by Carney last August. In fact, was when he actually made that statement, but he has since retracted it. So we can see that the pound moved higher, consolidated for a few hours, and then in the afternoon, 4 o'clock, we had this potential buy signal. The market actually filled at 167.92, and then traded through to the 168 level with a high of 168. 168.09, so 168.1 really is the high. And if you go to the daily chart from yesterday, when we drew in the fib lines of potential profit targets, you can see we're at 168.1, and that's precisely where the market traded to. We had a red bar there, which is the first indication that we must do something to mitigate the potential loss. And then we see the market come all the way back after trading back through the 168 level. Also notice that when the market traded through, we don't see an increase in volume. There's no green volume bar there. As there is no selling, it was just a case that the traders were able to move it through this psychological level, and then the market was brought back. So using the 50% below the red candle through after the market's gone through the entry point, you can see there that we're able to mitigate the potential loss on there, and in fact just get a couple of pips out of it as well. So even though we had this reasonable move in the morning there, let's just have a quick look, see what we had from the low to the high there, 44 pips, and then really the rest of the day the market didn't do an awful lot at all. We've been playing with the 168 on the overnight market there as well. So let's return to the daily chart. We've got the market again, you can see playing with the 168 level, which is the 62% that we also drew in yesterday as well, 167.97, which happens to be where the market is currently trading at. So a bit of resistance there as well. And let's have a quick look at the news. There's not really much more we can do with this chart apart from have a look at the possible downside target. Let me just remove these just for a second and draw in from here to here, and this is where you would expect to see some downside support should the market move lower there. So back towards the 167.54 should the market go short, and then of course the previous ones that we just removed from the chart as well, which are more or less in a similar area as well. So on the news front, what have we got? So we've got US weekly claims there for unemployment. Retail sales out at 130 for the US. These are forecast to show an increase from 0.1 to 0.5. Core retail sales also to show an increase to 0.4 as well. So that could add some momentum to the Dow, which we'll look at in just a moment. And then this evening, Carney is going to be speaking, and that's at 9 p.m. So make sure you're out of the market when he does make whatever pronouncements that he's got to let the UK financial markets know. So let's have a quick look at the Dow implied. Somewhere in here is already open. Yesterday it finished at 9.31. And actually, considering the market actually dropped yesterday, which we'll have a look at the moment, the first time in, gosh, I don't know, 10 consecutive days, we see that the implied actually didn't increase. So this would say that and suggest that yesterday's down move in the Dow, the one day, isn't actually the start of anything big at this point. It doesn't seem to appear to be the case because the implied volatility hasn't kicked up, so they're not seeing any sort of risk there at the moment. Doesn't mean to say that it isn't, but normally those two theories go together. The Dow goes down, the implied goes up, and it didn't do this yesterday, which I will show you now. So the Dow on the day session finishing down 102 points yesterday. You can see this is the biggest down day we've had in many weeks. I think the last time, looking at this chart, the biggest down day was here on the 20th of May, and then since then we've just had up day after up day after up day, apart from one day here where we had a down, but it didn't take out the low of the previous day, and then the market's just been bought back all the way through. This is the first bar to actually close below the rising lows convincingly. This is the last time, but then the market turned around and moved back to the upside. So what I'm going to do is click on the high down to yesterday's low, just to draw in a 62 and 76, and this is how we can now measure whether this move back to the upside is going to be genuine or not. So what we do want is the market to move back up, and if it is going to offer a short in the bigger picture, then we want to see it fail at the 16,934 area. If the market takes out this area, moving back to the upside, then it certainly has to take out the recent high, which is 16,970, and you will see the market more than likely head towards the 17,000. So this area here, the 62 and 76, is crucial. And if you look at the ETX chart, you can see at the moment that the market hasn't traded below this low on the overnight, the low that was put in place yesterday, and has been moving higher. But at the moment, it's just come off those highs, so it's just moved down to a smaller time frame. You can see there that we had this drop around 5:30 this morning, and that's where the market has remained ever since. So that's really it for today. Like I say, that's what you got to look for in the Dow, and I did talk about this, I think it was either yesterday or Tuesday's market view, about looking to see if the market has much more momentum for the upside. And what's crucial is this 76% must be taken out, and if that's taken out, then all eyes on the recent high. If that's taken out, we go to the big number of 17,000, and that will be the interesting figure. But again, we don't have any volume figures for this bar, because this is end of day charts that I'm actually using here. The volume is legally allowed to be withheld from the public until for 1 day, and then it's released. So that's why you see the volume behind by 1 day. So it'll be interesting to see. This should be a red bar tomorrow, and hopefully lots of selling, so that will give us a clue that there is some selling around. Right, well, that's it for me today. As ever, thank you for your support, also for watching as well. So have a great day, and I will see you tomorrow.